Euro dollar. So the euro's come back under pressure in recent trades since topping out at 110.60 several sessions back. At this point, the market could be putting in a potential lower top at 10.60 ahead of a fresh downside extension back towards those recent December lows at 105.20. But at this point, we would need to see a break and close below recent support at 107.96 to confirm and open the door for an acceleration to the downside. Inability to establish a close below 107.96 would keep the pressure potentially on the top side, with the market seen still within the throes of a correction and potentially trading back towards that 110.60 high. Sterling dollar. So cable continues to adhere to a well-defined downtrend off the 2015 peak, making a series of lower tops and lower lows. The most recent lower top was established at 153.36, but we could now have a fresh lower top in place by recent highs at 152.40, which will be confirmed on a break back below the recent low that we saw all the way down by 148.95. A break below 148.95 would not only confirm that lower top up at 152.40, but would also open the door for a fresh downside extension towards the 2015 low at 145.66. Dollar yen. So although dollar yen is broken back above previous support at 122.20, the market would need to establish a daily close back above this level to suggest that we could see more significant gains back towards that recent high that we saw at 123.76. If the market does establish above 122.20 on Thursday, this could open the door for a retest of 123.76, above which would expose a retest of the 2015 peak at 125.85. But again, inability to establish above that level would keep the pressure on the downside, with the market seen putting in another medium term or shorter term lower top ahead of the next downside extension back towards and eventually below recent lows that we saw down at 120.34. Euro Swiss. So nothing much going on with Euro Swiss as the market continues to trade within a very tight consolidation over the past several months. Key levels to watch above and below here come in at 110.50 and 107.14 below. But given the recovery from those record lows from earlier this year, the market is favored to break eventually higher back above 110.50 and towards 115 further up. Only back above below 107.14 would compromise this outlook. Aussie dollar. So Aussie has been locked into consolidation over the past several weeks, though the market is still confined to a broader downtrend, and therefore the consolidation is classified as a bearish consolidation. At this point, look for deeper setbacks in the sessions ahead, back towards the recent multi-year low from August, just ahead of 69, while only back above 73.85 would compromise this outlook. Dollar CAD. So dollar CAD continues with its surge to fresh 11-year highs, with the market now trading up to as high as 138.48 ahead of the latest minor pullback. At this point, the market is now focused on a test of that 2004 peak, which comes in at 140.07, while inability to break back below recent lows that we saw down in the 136 area will keep the pressure firmly on the top side and focused on a retest of that 140.07 high. At this point, only back below recent lows at 136.73 would take the immediate pressure off the top side, though any setback should continue to be very well supported in this market into the 134 area, with the market ultimately trading within this firm, highly constructive outlook. Kiwi dollar. So Kiwi has come back under pressure in recent trade after the market is once again well capped into rallies towards the 69 area. At this point, look for deeper setbacks over the coming sessions, eventually back down towards some support that came in back in mid-November around the 64.30 area, below which will expose the multi-year base from August down around the 62 area. SPX 500. So the S&P 500 has recently stalled out at 2117. That was back in early November, ahead of that May record peak at 2137. At this point, the market has since been showing signs of exhaustion and the potential for a top, and will need to continue to stall out in favor of that top, but we need to see a break and close back below that low that we had seen back on the 16th of November at 2003 to really confirm and open the door for an acceleration to the downside back towards 1870. We did see a break below 2003 earlier this week, but again, a close below 2003 will be required to officially put the pressure on the downside and accelerate declines. Gold. So gold has been consolidating just off recent multi-year lows at 1046, and the pressure remains on the downside for the market to potentially take out 1046 and head down towards major psychological barriers at 1000. But while the market does consolidate above 1046, there is still the possibility of some form of a base, but we would need to see a break back above 1100 to confirm and accelerate gains while taking the immediate pressure off the downside.